Okay, let's talk about October and how Ada County wound up with their sales at the end of the month. This is all for single-family homes, not condo and townhomes. So our median sale price at the end of October was $530,000. We're not seeing a lot of fluctuation right now, although the higher interest rates, that number is probably going to come down further. And again, I want to make a point on median sales price. That is not the average of everybody's home value. That is, if the median fluctuates, it doesn't mean your home has gone down that same percentage point. What the median means is that of all the homes that sell in a month, the median is in the exact middle. So when interest rates go up and the cost of capital goes up with it, that forces more of the less expensive homes into the actual sales channel because people can't afford the expensive homes or the more expensive homes anymore. They're all expensive, let's be honest.
No kidding.
What it means is that as the interest rates go up, compounded with the cost of acquisition, the actual home prices as they are, the actual homes that are selling, the ones that go on market, go in pending, and then actually close, those tend to be at a lower price point than the ones when the interest rates were a lot lower, simply because people can afford less. That's just economics, how it works. So as you see the median go up or down, or somebody says, oh, the median is down 10% from our peak or whatever it might be, that doesn't mean your home is worth exactly 10% less than it was this time last year.
Oh, yeah, definitely.
Quite honestly, if you've been in your home, a long time or even a couple years, basically if you had your home at the end of December of 2021, that's about what your home's worth today in the Ada County market. If you look at everything, how prices come up, come down, and everything else, we're sitting right about where we were at December of 2021, for what that's worth. In the month of October, going back to our report now, county sold 524 homes. We had 36 days on market for average period of time from the time they went live to the time they went pending. There were a total of 1,419 active listings. And at the end of the month, there were 475 pending listings, meaning that they had entered into contract, but they weren't closed yet. Now, as we're talking about Ada County, let's talk about the main cities in Ada County. And that's Boise, Eagle, Meridian, Nampa, and Star, as far as what we're looking at. So for Boise, median sales price was $523,100. That's up 0.78%, so not even a full point from last month. Average days on market were 29 days, which is up 16%. Closed sales were 209 units, which is down 15.3%. Most of October and definitely most of November, you're going to see the median come down some. You're going to see the average market days on market go up, and you're going to see the closed unit sales probably come down too. Number one, partially because of seasonality, but most important, number two, is because the interest rates jumped up into the high sevens, low eights in the month of October, which is going to retard the sales in November and early December. That's just how it is, on top of the normal seasonality where Treasure Valley slows down in the wintertime anyway. So let's talk about Eagle. Eagle's median sales price, $839,900, so that's up about 4% from the previous month. 39 days on market, which is an increase of 39.2%. And then closed sales were 53 units, which is up just over 15% for the month of October over September. Next up, we have Meridian. And the average sales price in Meridian was $515,000. That's up not even a percent. Average days on market was only 34, so it came down some. I haven't drilled down far enough to really see what spiked that, because to drop almost 10% on the days on market is pretty quick. But somebody sold really quick in there, which skewed the numbers. And then our total units was 160 units, which is down 17.5% from September. Next up, we have Star. And in Star, the median sale price was just under $510,000. That's down about 5% from September. Average days on market was 60. Now, with Star, there's a ton of new construction there. So you have to understand, the new construction guys put their homes on market in the MLS system before it's ready to show. Usually they'll be anywhere 45 to 30 days out from actually being able to walk you through it and show you the property. They'll start hitting the MLS because they want people to see that it's there, because it takes, new construction as a rule takes much longer than a resale house to sell. Because Star has so much new construction there, it skews their numbers on days on market, units sold, and everything else, because they have a longer turn cycle for what that's worth. And then the closed sales were 61 units. That's up 12.9%. So somebody closed more sales than usual, which is nice to see out in Star. And there's a lot of great new communities out there. And you also have, the Highway 16, they're tying it into 84. It's probably not going to be done, certainly not this year. So I don't even think it's going to be done next year. And if it is, it's going to be very late next year. But you'll be able to take 16 from Emmett all the way straight on to 84, whereas right now you're running down to 10 Mile or up on the other side out towards Nampa to get on there. So that's going to be nice, and it's going to free up things and make Star a little bit easier to get in and out of. Now let's talk about Nampa. Nampa also has a lot of new construction, but the construction in Nampa is less expensive, smaller homes, different builders than we have up in Star. So the median price rather, in Nampa is right at $400,000 right now, and that's down about 5% from September's price. We had 28 days on market, which, again, even though there is a lot of new construction in Nampa, there's also a lot of resale, more so than you see in Star, which is why the number's about half on days on market. And then the closed sale is 160 units, so you can see there's a hell of a lot more homes selling down in Nampa than there is in Star. And again, you have people like CBH and some of the other homes that their build cycles are quicker, the price points are lower, they have less amenities in the house. And it's not saying anything bad about the house. The CBH is a decent house, but it's different than what's going up in Star. So you're seeing higher unit count, less days on market, and a lower price point. And we're seeing a lot more people move there. I mean, Nampa, when the next census comes out, I would be surprised if Nampa doesn't surpass Meridian as the second largest town in Idaho, because there's quite a few people moving in there right now. That's what we have in Nampa. So snapshots we've had on the 5 main cities that we're looking at in Ada County, it's pretty stable. We're through the worst of it as far as the huge median jumps from this year to last year, because next report's going to be November. And by November, we started seeing everything settle down, and the biggest shifts in the market, if you will, because the interest rates jumped so quickly, happened in October, November, December. So, as it was coming down, we've actually come up from the points they were there. So you're actually going to see the median price creep up a little bit. Certainly by January, February will actually level off, because that's where we got our nicest bump. But as far as October, November, December, it's going to stabilize quite a bit, and actually it's probably be positive in November and December, but stay tuned. We'll see. So activity is still healthy, and everybody says, well, we're down 30%, 40%, whatever, the market's dead. Even if we're down 30 or 40%, that means that 60 or 70% of the deals are still happening, and they are. We're putting people into escrow every month. We're seeing homes sell every month. It's not what it was, but it is what it is. Take that for what it's worth. My wife hates when I say that, but it is what it is. That's the reality we have. We can't change it, because what's influencing the market right now is outside the control of the homeowners, home buyers, or the realtors. It is simply that interest rates, because the Fed's actions against inflation, have driven mortgages up. They had been up the 8% range last week, but between the Fed holding pat on the meeting they had Wednesday, and also this morning the jobs report came out, about 20,000 jobs less than they had estimated, after last month's blowout report. Between those two things, the bond market has settled down, and the 10-year bond is what sets, for the most part, the price of the 30-year fixed mortgage, which most people use to sell or to buy a house, rather. Right now, the interest rate's down to 7.5 today, because it came down, the 10 years down to about 4.52 last time I looked at it. The market's still open for another few hours, so it may settle even more before that's done. It's nice to see it starting to settle, because everybody thought the Fed might raise one more time, and if that did, that would, of course, drive the interest rates above 8%, which nobody wants to see. When we talk about 8%, we all hate 8, no question. But I want to give you a couple points for context. Number one, prior to 9/11, 7 and 8% was very normal. I mean, Kirsten and I bought a couple of houses, in the 7, 8. I think we actually had one at 9 back in the mid 90s. And you look, when I was a kid helping my mom, in the early 80s, homes literally were 18%. The home loans were 18%. Now, prices were considerably, like 90% less than they are now. The same house that you could buy back then for $50,000, $60,000 is now $500,000 or $600,000.
More money, more problems.
But if you look at the value of the dollar, 1982 compared to today, if you look at what people's made for income, 1982 to today, and calculate everything, I actually did a deep dive into this early this year, but I think we crossed the threshold when rates got past like 7.15, 7.2%. At that point, between the cost of the home and the cost of the loan, the interest rate, we finally surpassed that threshold. So for the last few months, yes, it is the most expensive time to buy a house ever. The whole 18% and all that is good, but with context, and up until, like I said, just a few months ago, so say beginning or middle of Q3 in 2023, that's when the threshold got crossed where now, yes, you can say it's the hardest market or the most expensive market to buy a home in American history. We're there. That is what it is. But at the same time, you got to talk about buying a home, because if you don't already own one, because yes, it's expensive. Yes, it's scary. Yes, we have uncertainty everywhere. But if you want to build intergenerational wealth, meaning you buy the home now, it becomes worth more money. You sell that, you take that equity, build it into another home, get into another home. So you have huge equity in the home that when you pass, or when you get to the point in your life where you start passing things on to your kids, you're helping lock in that intergenerational wealth. Home ownership is and will always be the number one way to do that for most Americans. While there's some that are incredibly rich, they do it different ways. But for the vast majority of us, the intergenerational wealth we build comes from home ownership. So even though it's scary, it's expensive and everything else, if you have the ability to buy a home, you really should. Because if you look at any period, when I say any period, any 10-year period, 15-year period, however you want to look at it, or if you want to look at any 50 or 60-year period, the graph for home ownership and the value of a home starts out at the bottom left and ends at the high out on the right side. It always does, no matter what. Are there peaks and valleys? Yeah, absolutely. If you buy at a peak and you have to sell at a valley for whatever reason, that's a bad scenario, and you certainly want to try to avoid it. We try to help all of our clients avoid it. But more than not, if you're going to hold it for any period of time over 18 months to 2 years, you're going to make money. That's how real estate works. We just divested a property that we'd had from actually over 20 years now that I think about it. And we look at what we paid for it. And over that 20-year period, at one point, it was worth double what we paid for it. Another time, it was worth less than we paid for it. And then when we sold it, it was worth 195% of what we paid for it. So it was nice. We made a lot of money. Home ownership is a long game. Building intergenerational wealth is a long game. But it starts with home ownership. So even though things are very expensive, and yes, it's the most expensive market to buy a house in history of American real estate, still got to try. As usual, if you have any questions about any of Ada County or Canyon County or any of the other Treasure Valley counties, give us a call. We'd love to talk about it. If you're looking to buy a home or sell a home, we are always here for you as well. Thanks for watching. We'll see you next time.